What if your life changes in 1 second? On this episode of Crap, Now What? We're going to talk about how life can change in 1 second. I'm sure most people, most of my listeners, and if this is the first time you found me on your podcast feeds and have joined me for the first time, I don't usually do a topic like this, but this one is very near and dear to my heart. And so that is one of the things that I do with this Crap Now What podcast is I bring my own ideas, my thoughts, and weave them through real life situations with the idea that our finances, our emotions, and the things that happen to us in day-to-day life make a difference and are often interchangeable as to how we grow and how we accumulate our finances and our wellness financially, emotionally, mentally, and personally. So I'm going to share with you the latest crap now what that is in my life. Something that happened to me. If you have happened to be one of my regular followers, if you're catching snippets of this podcast in my social media on TikTok or Instagram, you're going to understand the fact that I like to infuse my own personal situations as much as possible. And this one's very real. This is my first podcast that I've recorded in a month. My crap now what moment that was 1 second in my life has positioned me in a place where it's difficult to have gotten back on social media. So we're going to dive into that because this is something that you should hear. The spirit of this podcast is for you to be as informed as possible of the things that you have opportunities for, things that are financial, little tweaks that you can make that are going to make a difference in your life. I want you to be as informed as possible. I do not want you to be in the position where you're uninformed of the options that you have. And this one today is going to be specifically about the opportunities that you have for life insurance. So I'm going to back up. I'm going to back up to September 27th of just a little over a month ago. It'll be 4 weeks tomorrow, but by the time you see this, this will definitely be within a month. And that for those people who know me, those people who care about me, and this might be a surprise. I've not publicly told a lot of people or shown a lot of people what's happened to me. What I want you to understand is that I'm going to share this with you with the spirit of I've had my own personal crap now what moment. This is not the normal way that I dress, but I did this on purpose because underneath here, and I'm just going to go ahead and let loose a couple buttons here because I have a whole thick pad of body armor. I've been joking that this could be my Wonder Woman costume for Halloween. This particular back brace goes all the way down my waist. I've been wearing this for about 3 weeks. It was made custom for me after I was in an accident, a vehicle-related accident that actually fractured my L1 vertebrae, which is the vertebrae that starts in that lumbar area and goes down your back. So what this did to me, and it actually has gotten worse rather than immediately better, what this has done is that it was a pretty serious fracture. The type of fracture that it was is a burst fracture. And it is something that means that the vertebrae is misshapen now, and it has affected my ability to walk. It has affected my ability to take care of myself. I am so blessed to have adult children. I'm blessed to have family and friends who have shown up to help me over the last week. I cannot thank people enough But I've been unable to completely take care of myself 24/7. We have not even ventured out for me to be alone yet. So my crap now what moment happened in one split second when I bounced up, landed straight down on the seat of my vehicle. And that's what had the impact, the pressure. I could feel it happen, that something had happened to my back. I'm 3 months at least with this accessory, my fashion accessory. I'm wearing t-shirts underneath it because it helps the body as well. But I'm not always going to be showing it, but I can't hide it. If I was not on Zoom and I was walking into an office, people would see it. The pain is still there. I don't want anyone to ever go through this. And I'm going to tell you too, though, on the spectrum, I'm blessed. You can see my hands still work. I'm still talking with my hands, even with a series of medications. I'm still cognitive. I'm able to speak. I can actually use my legs, but I am still, well, I can't quite show it here very well, but I'm still using a walker. And I will be for a little while longer, but physical therapy will gradually get me off that walker onto a cane and then independently walking even with this brace. So I'm very hopeful, but it's going to be a long road. Very, very hopeful, and hopeful that I stay away from surgery. It's still not completely off the table, but we're going to take care of ourselves, and I'm going to take care of myself as best as I can. And I didn't mean to ramble and share and overshare and vomit out all these details, which, by the way, there'd be more details if I really overshared. But why I'm sharing this is that 3 days before that vertebrae broke in my back, and effectively I have a broken back, 3 days before I was kickboxing. I had loved that class, decided that I was going to add it. For those of you who know me, I have been boxing regularly, not in the ring boxing, but going to boxing classes, or I had my own heavy bag in one of the places I lived, and I would start up in the morning and box. I've done a few videos that are on TikTok that have me boxing. 3 days before this happened, I was thrilled with this new kickboxing class I decided to try. I decided to try it midday. It gave me so much energy for the rest of the day that I was just on a cloud. And then all of a sudden, crap, now what? Now what? Now what? I'm physically needing to have care. I'm physically not able to completely care for myself. I'm physically and personally looking at extensive bills for the care of myself. For anybody who is self-employed, you do know that most healthcare insurance has a pretty high deductible, and we know that that's going to be the case. And in many cases, we squirrel away the money. And I say we because I'm talking and speaking about other entrepreneurs and business owners. Some of you have found, even personally, that your deductibles have changed. You get these either or choices every year when you sign up for healthcare. Am I going to go with a higher deductible and a lower premium? Or am I going to go ahead and get more premium and have a lower deductible? You're making decisions probably on an annual basis of what kind of healthcare you're going to sign up for. And nobody has a crystal ball. Nobody has a crystal ball. I wish we did, because we certainly would know what kind of choices we want to make. The same thing applies to life insurance. Life insurance can actually be something that you use during your life. During your life. Life insurance is not always death insurance. It is and can be a part of your portfolio that you have expenses covered for a funeral, maybe even have gotten a little bit more into the planning of having a large enough life insurance policy that you are covering for maybe other dependents within the household. So that if something unforeseen happened, if you had that 1 second in life where life changes and all of a sudden you're no longer with your loved ones here on earth, a death benefit can help offset a mortgage, offset medical expenses or other expenses that happen upon that death or that change. It's also one of the ways that children can still go to college without having the main or one of the breadwinners. They're physically still contributing to that there's a plan for the future. Of course, life insurance is oftentimes considered from the angle of death benefit. And I'm going to shift here in this chair because I'm not able to completely have that game time to be able to, like I say, game time decision, or being able to be strong enough to be able to sit in a chair without support. And I've now reached my max on that. So I needed to switch. That said, I am talking about life insurance to help cover some of these oh crap moments. See this nice, if you haven't seen it yet, my back brace from breaking my back. How does a life insurance policy, if you're not familiar, how, and you would be asking yourself, how does a life insurance policy help me when I'm alive? Let's look at that. It's called living benefits or accelerated death benefit. That would be the life insurance side of the world, that the carriers who are writing these policies and sending and putting together customer brochures are saying accelerated death benefit because they're going straight to how it happens. I'm talking about it from the angle of living benefits that help to take care of you or a loved one, depending on how the policy is written and what triggers the event to be able to make a claim on a life insurance policy while you're alive. These type of living benefits are available with certain types of policies. There are term life policies in this world that have the living benefits. They have the critical care. If there's a critical event in a person's life, they have the chronic care. They have terminal illness. Most people are familiar with the terminal illness. A lot of life insurance policies, term policies, even permanent life insurance policies carry a terminal illness rider on there. So if someone was to become terminally ill, then a large portion of that death benefit can be drawn down on if there's a need to pay expenses. Or most people talk about it from the standpoint of a person knows that they're going to be passing within a 2-year period. They decide to go travel and hopefully have enough energy to enjoy that time with family or friends. I'm focusing a little bit more on the type of life insurance policies that have chronic illness or critical illness or critical accident insurance riders on that policy. This potential situation here with the broken back is an example of something that could very likely allow me to draw down on the death benefit of one of the policies that I have. I've always made sure that I had living benefits. If you go back in my history of videos, I've talked about this a few times before. I joked about it a little bit. I joked about it a little bit, or did it a little bit tongue-in-cheek, a little bit funny, that I didn't want to be a burden to my children. If something happened to me, I did not want my children to have to change their lives, or vice versa. Now I'm blessed. Oh my goodness gracious. My son has been taking care. He's been able to shift to work remote and take care of me and be there to remind me of my medications, do laundry, get me back and forth, actually help me get this set up so that I could record this podcast today. Laundry, food, driving me places. I am not able to drive myself right now. I have lost a lot of the ability to take care of myself. And therefore, I'm likely to qualify, depending on how long it takes me to get well, I'm likely to qualify for the opportunity to draw down on the death benefit of my policy in order to offset the medical claims that are coming through. Heck, I took a ride in an ambulance. That's a big bill. The several doctors. I've developed now a very serious, or it seems serious, a very strong pain in my hip several weeks after that. We have no clue as to how this is so painful when I'm already on pain and nerve medications. So we never know what's going to happen. And that's why I want you to be informed about accelerated death benefits, living benefits that can offset lost income, doctor's bills, anything. The medical equipment. I have a walker right over here. If I needed to have a wheelchair ramp, which that seems to be off the table, the paralysis side of it, I was lucky enough to avoid. And I feel for the people who've gone through that, because even this stage is life-changing. That said, I want you to see a few visuals of different types of policies, some different illustrations from one particular carrier. I just did this once. The point that I want to make to you is that I want you to be knowledgeable that there's different types of life insurance, and there's different types of life insurance, not just term life, whole life, IULs, VULs, any different type. I'm talking about the kinds that have different benefits that are possible for you to use. Let's look at this just a little bit closer. I have a few examples I'm going to share with you. A 30-year-old, a 45-year-old, and also a 58-year-old. The difference in premium, but I want you to see the impact of having a policy and what is possible potentially if you are ever in need to draw down. If you ever have your own crap moment, I want you to have this type of coverage. So I'm going to start with the 30-year-old. Just an example. And I will go ahead and say that I'm using a carrier that has been known to have extremely strong living benefits, but most companies that you would meet have living benefits. It's just whether you do the research or you're working with an agent who is familiar and will ask you these questions and show you the value of maybe paying just a little bit more. A little bit more is all it really figures out to be, to have these additional benefits. So I kept it simple. A 30-year-old male, standard non-tobacco. The cost would be, and this is showing it here, $39.38. So this is an example. So if you've heard radio ads for Ethos and some of the other carriers, and they're rattling off numbers and it sounds like very reasonably priced insurance, this is reasonably priced too. This is $250,000 in coverage for a 30-year-old male, $39.38 a month. There's that $250 in coverage. It's got another reference here. If my needs change, it can be converted. This is another one of the things I love about a term policy from the right type of carrier, that it can be converted to permanent. because term means that it's only going to go so long. In this case, and in most cases, carriers will hold up to a 30-year policy. So for the next 30 years, that $39.38 would be locked in and all the benefits would be available. But this is also saying when you're working with your agent, we can talk about the option to go to a permanent policy. And then down below here, it says, if I become ill, I can access a portion of my death benefit. So this is what I've been talking about. This is the reason I brought this to you today. You never know when your life is going to change and suddenly a benefit like this is going to make the difference on the financial end, potentially for some people, avoiding a serious deficit in funds, a deficit in funds that may cause a mortgage failure to pay the mortgage. That is actually the number one default on mortgages, is an unexpected medical situation, unexpected medical bills that are causing a default on a mortgage. Can you imagine if you've had a horrible medical situation and now suddenly you're not able to pay the bills, suddenly you're facing a default on a mortgage? That would be horrific. It's like doubling down on crap now what moments. Okay, let's focus in again on this. If I become ill, the way the qualifications work for drawing down on the death benefit, for utilizing those living benefits, is whether or not you're unable to care for yourself in 2 out of the 6 different ways. The ability to drive, the ability to dress yourself, to be able to eat, to be able to shower independently, to be able to use the restroom independently, and to be able to get in and out or on or off, in or out of bed, on and off from a chair or a couch. I'm going to be honest with you. I'm still struggling after a month with many of these things. Now, I've acted like a preschooler once I've learned that I can do one more thing. Yay, yay, yay. I've challenged myself and worked through it. But the day that I could finally dress myself, I was so excited. That was just a little over 10 days ago that I finally hit that. However, I still couldn't do my socks and shoes, so I'm not completely independent even in that category. And that's why I'm so passionate, why I'm so open today about this, because I want to encourage you, anybody who's listening and anybody that you love, that you would share this with. For $39.38, this 30-year-old who could be potentially a new parent at about that time, young kids. Can you imagine me trying to take care of young kids? I need to be the one who's being taken care of right now. If this was you, it would change your life. Look at the numbers here. So if this 30-year-old male, heaven forbid, becomes terminally ill, of the $250,000, $214,485 would be available as a lump sum. That's life-changing. That's helping the household and not having to wait for the death benefit. These are examples here, and I'm going to show you a couple more. But in this case, the 30-year-old with a chronic illness. Chronic means something that doesn't go away. It goes on and on for years. Sometimes it's a heart attack. Sometimes it's an injury. Mine kind of fits in that chronic category. So as my bills are racking up, or as this 30-year-old who hasn't probably had an opportunity to even save up much money, $1,517 a month makes a difference. Critical illness, critical injury. This is an injury. Should it fall in the category of being critically considered as an injury? Look at that. A lump sum up to. It depends on what it is. And there's a doctor's referral report that's considered, but up to $197,000. I'd be honest with you, I don't need near that myself personally, but to have that available if a person had such a critical injury that the bills are racking up, surgery after surgery after surgery. This particular company offers an Alzheimer's disease benefit, and you can see there's a potential for a lump sum. So accelerated benefits like this vary based on what the carrier decides to provide. I want you to find and do policies that have living benefits. And I will tell you one place that, by and large, I don't know any place that I found where an employer's life insurance that's provided as a group policy through your employer, those policies, number one, you lose it when you move and you quit jobs or change jobs. Two, they don't have the living benefits. It's a straight death benefit. It may have a terminal illness, but the extra living benefits, like listed here, critical or chronic, they don't have those. Now, these are examples of at age 40 of what the figures would be. I just want to call that out in case you happen to be looking at and studying the screen. Okay, I'm going to jump through these same examples. I'm not going to break them down as much because that's going to be redundant. For a 45-year-old male, the longer you wait to get life insurance, even a term policy, any type of policy, the more expensive it gets. But this is still 30 years on a 45-year-old. This is saying it'd be 92, 62, same amount of coverage. The point is, there are still the living benefits, and therefore, even though it's more expensive at age 45, it's very important to consider still having life insurance. You have not reached that point where you have to think about it as death insurance. You're thinking about another way, a more well-rounded way of how you're taking care of yourself and how you're taking care of your household. Even a 58-year-old. Okay, like I said, the longer you wait, the more expensive the monthly payments get. That makes a lot of sense. Also, the longer a person waits, the shorter the term. In this case, at this point, typically speaking, a 20-year term is about standard from the carriers. Instead of going with a quoted $194.04, if it was a 30-year policy, we'd be looking at a person who's 88 years old. Now we've got a very likely event that one of these other benefits actually gets triggered. So the benefits change just a little bit. As you see some of the example figures, this would be example figures at 68. However, if you look at my situation, I am 58. That's part of the reason why I picked that age. That $197 for a term policy, to be paying that much and have a $250,000 death benefit, plus the ability that if something like this happens, to be able to draw down on that policy, that's still expensive every month. But overall, when you compare apples to apples to the situation that a person could end up being in, it's still worth it. In my opinion, it's still worth it, and it's something that you should explore. So I'm going to start wrapping this up. And I see, yes, I still am kind of flashing everybody here so that you can see, and I've joked about it several times about my Halloween costume ending up very corseted looking. I don't think I'm actually going to be at a Halloween party. However, you have to make light of things too. So what I want for you, in that spirit of being informed rather than uninformed, or underinformed, however you want to say it. In that spirit, what I want for you is to know and make moves and pivot now. Pivot now until you're facing, you never know when you're going to be facing a situation. Do it now because it makes a huge difference to my mindset that I know that I have that bucket. I know that there's going to be ways to offset some of these unexpected medical expenses, and it helps me to sleep better at night. It gives me the opportunity to be less stressed and um, less cranky, frankly, less frustrated, less cranky, because I know that I have put into place these measures and I want you to be able to do that. So please, whether you reach out to me or you reach out to someone else that you know, please do it. Only a small fraction, only about a third of the households have any kind of life insurance in the first place. Please change your paradigm, change the way you look at it. Don't look at it as death insurance, look at it as life insurance, living your best life as stress free as possible, and being in a position where financials aren't as much of a concern as they would be if you didn't make the move to have proper coverage, didn't go ahead and gamble a little bit that maybe this kind of move would be very beneficial to your family. You don't lose out. If you never have something like this happen, the death benefit goes on to the beneficiary, so it's a win-win. Just find the best type of insurance that includes living benefits. And if you still have questions about what that means, send me a message. I'll be happy to walk through this with you or with others that you would like to share this message with. Make sure to insure the breadwinners, all the breadwinners in the household. Look at it. If your household budget can't completely handle full-on coverage, permanent life insurance, at least get a start. Get a start. Make sure that the second person that gets insured within the household has a convertible policy, has one that makes a contribution to the household. Try to at least take the extra step to have the living benefits too, because you never know who's going to need it the most, whether it's the primary or the secondary breadwinner, or if it's not traditionally a paycheck that's coming in, but if it's someone that's contributing to the household, where if they were set back would make a huge difference, then they should be covered as well. Watch for living benefits. I've said this 4,000 times, probably if I got counted on how many times I said living benefits. But the life insurance that you have with an employer most likely does not have living benefits. So that means you have a gap in coverage. Look at policies with living benefits, because if you looked at those rates, very reasonable to have living benefits in a traditional term policy than paying for a separate long-term care policy. Long-term care policies tend to be quite expensive, and the restrictions on how you use that benefit typically requires a person to be checked into a facility in order to use the policy, showing receipts and all kinds of different hoops. The carriers that offer policies with an accelerated death benefit or the living benefits, the money is triggered based on the need. Like I said, 2 out of 6 is typically the way it is. It is not a situation where you have to show receipts, what you did with the money, anything. You get the funds and it's up to you to apply it. No questions asked. So I'm a big fan of a really strong life insurance policy with living benefits instead of stretching the budget to have a separate long-term care policy. There's a lot of people that you talk to who will say the same thing. Their disappointment and how difficult a long-term care policy was to execute, or the child or adult child who's trying to help their parent. It's a lot of paperwork. Look at the proper type of life insurance policy. And I want you, if at all possible, if I possibly, by burying this a little bit and coming just straight out, because shoot, if you were in the room with me, sitting right next to me, you'd see the same thing. You'd see this brace. You would see how I cannot move very well, how my hip is going to really be sore when I stand up from this, and my back has that really tight pain in it and that firmness to it. You would see it anyway. And I wanted to go ahead and be on camera so you can have this as a memory to remind you, do what you can to take care of yourself. At least I know it has brought my own peace of mind. I want that for you. I want you to have this memory that you could be doing one of your favorite things, and in just 1 minute, have all that change, at least for a significant period of time. If you like these ideas, please share. Please put a note in the comments. I know you can find this podcast on any of the platforms where podcasts are posted. I appreciate the people who do follow these. I love the people who've gone to my website, goblazingstar.com, to watch other episodes, but also to learn more about myself and Blazing Star Wealth Strategies. I focus on helping people to untax their retirement dollars, helping people to enjoy more of their money. This very episode was very much in line with that, even if we focus just on one segment of how life insurance can actually benefit you or benefit a loved one. I thank also my partner, Caleb at Sal Media. He helps to edit. He's been patient with me until I can get back on the screen and has helped me tremendously these last few weeks to keep my social media present alive. Please look for me on TikTok under Powerful Money Lady. Also, I'm on Instagram, and we have company Facebook and Instagram. So you're going to find me anywhere you look for Blazing Star or Shaunelle. And I look forward to bringing you more ideas and keeping you as informed as possible. Okay, so if you're still listening to this podcast at this stage, this is the boring stuff. This is the disclaimer. And I'm doing this because, yes, I do care about who you are and what you do with your money. And I'm going to be here to help give you some ideas. However, these are just ideas. They're theories. Sometimes these are ideas that are coming into my head based on what's going on in the world at this time. And they're not necessarily specific financial advice. I do encourage you, if you decide to do anything with your money, make any changes, seek the advice of a professional. You're welcome to follow up with me or with someone else, and make sure that what you're doing is something that fits with you, your lifestyle, your finances, and it's a strategy that's specific to you. Again, these are ideas and concepts. Do not necessarily take these as specific financial advice and follow it directly without having a full education.